Rest up for it. Let's get to the judge.
All right, guys, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, gearing up for that huge week ahead that Carl and Sarah were just talking about. A Fed decision, more mega cap earnings, the tariff deadline, and more than that, too. We'll trade all of it with the investment committee. Joining me for the hour today, Stephanie Link, Jim Lebenthal, Jason Snipe, Rob Sechan. S&P, NASDAQ, they are at record highs, and they are extending those gains yet again today. Rob, it's good to have you back. We do have a very big week on tap. We'll show you the calendar. Piper Sandler says, we believe this bull market still has legs to run until the end of the year. Has to get over, if it's going to run, it has to get over some hurdles next week. All right, the Fed decision, Meta, Microsoft, Amazon, Apple, the tariff deadline, jobs report, and who knows what else. What do you think?
I think in the short run, earnings are absolutely going to deliver. I think you're going to see that. I also think positioning isn't stretched, and so there's room to run. Momentum, while it's breaking on a daily basis, still pretty strong on a weekly basis. So I think at least in the short run, we can see some positive momentum continue. Intermediate term, it gets a little more scary because of valuations, but you know that's a terrible timing tool. There's no way to gauge that.
Maybe it's a terrible investing tool also. Forget about the timing. I mean, depending on what, right, if they look at rich now, maybe, but if growth is going to be better than people thought, maybe not.
Careful of new paradigms, Scott. These are things that I think you have to pay attention to, and you can get growth at a reasonable price while still paying attention to valuation. I just think that the speculative fervor that is starting to overtake markets in meme stocks, in very expensive parts of the market, is something you should pay attention to.
Okay, I'm glad you bring that up because there's a note that I have here on my phone that's making the rounds within the last 30 minutes or so, okay? It's from Goldman Sachs' trading desk, in which they say, sharp increases in speculative trading activity historically signal above average near-term equity returns, but poor medium-term prospects. That's according, again, to Goldman Sachs. When such trading surges occur, they say, they typically bring slightly higher near-term volatility and often lead to eventual market drawdowns. The pattern has been especially pronounced during the recent period. That's what Rob, Steph,
let me add to that really
because
quickly,
it's the meme
Scott.
Stocks, it's high beta,
it's unprofitable
so-called
tech,
low quality,
unprofitable tech, ARK, nothing again, but ARK is a sign of speculative fervor. Meme coins, these are all things that are up 50 to 100% since the April lows. 50 to 100%.
Steph, is this like a point of worry at this point? Because there's been a lot of speculative stuff that's gone up a bunch.
There's no question. I worry about it a lot. And my eyes are on it every day. All of us are watching it. But I come back to 32% of the companies in the S&P 500 have reported so far. And it's broad-based. It's 5% total revenue growth. It's 8% earnings growth. That's better than expected. The economy is still growing. So I'm not whistling past the graveyard on the meme stuff. But the fundamentals on the other parts of the market are really very, very strong. And as I mentioned, it is very broad-based. And I think next week, the most important thing, Scott, it will be the tech earnings. Because Meta, Microsoft, Amazon, Apple is 19% of the S&P 500. And so it will mean something. Now, Google, we learned so much from Google. Advertising is strong. Congrats to you on the Google.
Very kind of you.
And I think you too.
Yep.
And maybe even you. But I'm the only one that doesn't own the Google. But that's okay. I own Meta and I own Amazon. But we learned that advertising is quite strong. We learned that cloud accelerated. I think that Meta is going to have a great quarter because they're the ones that are monetizing AI the best. But what I was most impressed about is that we saw that Google increased their CapEx and CapEx
by $10 billion,
by $10 billion,
$85 billion.
So the AI story is still alive and well, and that just goes back to that's not me.
Let's not.
That's fundamental.
Okay, let's not go quite into all that yet. The feeling I get from this conversation is that there's a chair, and 3 legs of the chair are really strong. The earnings, the economy, the consumer, the outlook, whatever. One leg has some cracks in it. That's the meme stocks. That's the momentum stuff. That's the low quality stuff. That's the high beta stuff. and everything is fine, assuming that leg doesn't break off the chair, because then you don't know where you're going to fall. Are we at that place?
I'm not worried about that leg breaking off. I think we're all watching it. It's good to talk about it, but I'm not worried that if it breaks off, that somehow it's going to take the market with it.
Well, but that's what the crux of this note is about.
Yeah,
that it often leads to market drawdowns when you have this high fervor, highly speculative environment, and when that has a problem, inevitably it causes the market to have a bit of a problem. Not like a massive problem, but if you're going to get a big drawdown in those kinds of names that have put the extra fuel on this barbecue, you're not worried about that at all?
Yeah, I'm not sure that I'm going to use the three-legged stool analogy, because simply the other legs are so darn strong.
Well, that's good, because I use the four-legged chair. So why would you use a stool if I already used a chair? Stay with me. Okay. Stay with me. Okay.
All right. Even better.
Okay.
You can take a four-legged chair and make it a three-legged stool, and it still keeps everybody upright.
You want to use like a six-legged something? Stay with me.
Okay. You know what I like?
You ruin it.
You know what I like, Scott? I'm not ruining it. I like pretty pictures. And you know what are some pretty pictures right now? Are the pictures of earnings revisions on stocks that have already reported. So I don't care if it's Alphabet, I don't care if it's Delta Airlines, Citigroup. When you look at what analysts are doing to the revisions of these earnings going forward, they're hooking up. And that's something that can support the stock market over the long run and power you through whatever may happen with the meme stocks, which I don't think anybody on the desk here is participating in.
No, but well, some people have participated in some of the names that have gone up in such outsized and hyperbolic, parabolic looking ways. And by the way, as part of this Goldman note, Jason, they say the indicator about speculative trading now sits at its highest level on record outside of 98 to 01 and 2020 to 2021.
Yeah. And, I don't play in that sandbox, but I respect the point and I understand, what potentially is the outcome of some of this trading activity in the speculative names.
Might play. I want to make sure we're clear on this, okay? I am not specifically talking, nor are they, just simply talking about so-called meme stocks.
Right.
There are many widely held names and loved names within the high beta ETF,
for sure,
or things that have very high valuation that are obviously good companies.
Yep.
I don't need to go down like Palantir, things like that.
Yep.
So let's not act like AppLovin. Let's not act like, whoa, I don't own any of that.
Right.
Stuff.
No, I agree. Yeah, and I think to Steph's point, what I'm more focused on is the breadth. Breadth has been positive. You're talking about an 80% beat rate, for the 30+% names that have reported. Next week is Super Bowl week, which you already just described, where we have another third of the S&P reporting, right?
Yeah.
And for me, I agree. I think the tech names are going to be extremely important. We got 4 of the 7 hitting the tape next week: Meta, Amazon, Microsoft, right? So, and I think those numbers, Apple, and I think those numbers are going to be positive, and because of the read-through we saw from Google with all the levers that they had to pull, and kind of the concern going in to the print and how much these names have run. You've seen them deliver, so I think we'll see more of that next week.
The B of A flow show today says you've got risk on until bond yields in the U.S. go above 5.1%. You can take a look at the curve. They're not that far away, right? They're not that far away. I mean, you can look at what's happening in other bond markets around the world, but yields have been creeping up of late. There's no doubt about that. Could we show a whole look, guys, aboard of all of the curve? There you go. I mean, you're at 494 on the 30, 440. We'll see what the Fed does next week, too, by the way, and we'll get to that later. But if there's one thing we learned this week, and Steph really hit the nail on the head, is that these companies, Rob, are spending and spending and spending, and they don't really care about the return on the investment today. The question is it going to come tomorrow? Yep. You're buying that dream. You are. You own Microsoft. You're buying that dream. Wedbush, $600 target. They maintain, outperform. Dan Ives calling that stock the Scotty Scheffler of software. For those of you who are not golfers, that guy's good. Okay? He's like, I'm not saying he's Tiger, but he's like crushing everybody these days. So that gives you an indicator, Rob.
We would use, you and I, Scott, the Michael Jordan or Steph Curry of this space. And it's hard to argue that they're not the highest quality technology company in the world. But stock's not cheap. We own it. We are neutral to Microsoft. It's been something that we've episodically trimmed, regrettably. Diversified management, diversified product base, great management team. This is a company that is firing on all cylinders. They will be a beneficiary of everything that is happening, as will Meta, who's arguably been the largest player to be able to monetize AI at this point. So I just think you're going to continue to see enormous cap spending, which supports the semis, the Broadcoms, the Nvidias, all those types of business that I know Steph and I have been investing in and talking about on the show this year. And I don't see any slowdown for that. That said, just to bring it back to the speculative fervor. Okay, just for 1 second.
All right, make it a quick second, because the train has left that station now.
No,
we're onto the earnings.
You need to be able to say that forward returns are coming in. You can already see with each earnings beat, there's less and less upside with that beat. And why? It's because of that relative positioning. People are all in, not institutions, individual investors are all in on the speculation. And so forward returns draw back a little bit. I think these businesses, which are a very large part of the market, which drive the market, are firing on all cylinders. So they're not going to be the ones that are completely impacted. You might have ebbs and flows, but this is a long-term story that remains intact.
Okay, that was about 70 quick seconds, but that's neither here nor there. Now we're going to move. We're going to talk about Meta because of the spend, Steph. The CapEx guide is 64 to 72 billion. That's up 83% year on year. Those numbers don't mean much to people other than, wow, that's big. And they continue to grow. And you don't care as the shareholder. I had someone say this week, I think maybe it was Ives, who said the spending's actually bullish, not a negative on any of these companies. Do you feel that way?
Yeah, it's going to fuel future growth, absolutely. By the way, 70 billion if they spend this year, their free cash flow is 34 billion after that, right? So they have so much free cash flow, and they have monetized AI. AI in ads has increased 7% time spent at Facebook and 6% time spent at Instagram. And price per ad is up 10%. So I expect to see very strong results there, improving results. I like that he's being really aggressive on buying people and getting more talent in.
Zuckerberg?
Yeah, I do. I really like that a lot. So I think they're going to be I think the quarter's going to be great. The biggest question is the overall expense guide, right? That's the thing. We don't want that to go higher in terms of the OpEx piece. So that's the thing I'm going to be watching. But I think this is going to be great. I really do. And I don't think it's expensive at 18 times EBITDA. It trades in line with its historical average.
How do we feel about Amazon, which got maintained by today, 265, Mones Crespi and Hart? Everybody on the desk, like Mr. Snipe, owns this name. Are we optimistic going in?
So I think as it relates to Amazon, for the couple of things for me. One, the consumer has obviously hung in there, which I think is a unique positive for them. Prime Day, which is not Prime Day anymore, it's Prime Week, will not be in the numbers, but it was positive, and I think that's a good number for the stock going forward.
Yeah, I know, but you're talking about things that are not at the heart of what this company thinks it's going to buy. No, but you're bearing the lead. Everybody wants to know where AWS growth is. What are you willing to pay for whatever level of growth that AWS is going to be? That's the whole story.
It is the whole story, and it's the largest player in the marketplace, obviously, on cloud. It was up 17% last quarter. I think you'll see a similar number. It's a $120 billion business, right? So, and you're seeing, I mean, Google Cloud was up a lot. Azure was up a lot. I think this is the #1 player in the game, and I think you'll see continued growth here.
You can talk about them from a marketplace standpoint, but they'll tell you, well, we want to be what we were in retail to AI.
Yeah.
They want to be an AI marketplace.
Look, Amazon Web Services is very big. I think we have to be realistic that the growth rate in Amazon Web Services a year or 2 years ago may not be the same today simply because it's bigger. That doesn't mean that it's doing poorly.
Yep.
I mean, one of the things that worked with Alphabet this week is that their Google Web Services is smaller, so the growth rates look bigger. I by no means am throwing shade at Amazon. I think it's going to be a very good quarter. I actually wouldn't give, I wouldn't pass on the idea that the overall consumer business actually powers them as well. And I'm happy that we're not talking about that.
Yeah, no, but you're not going to pay, you're not paying the multiple you're paying for the consumer business. As the multiple gets bigger.
This is a good discussion. I don't think it's as expensive as we used to talk about Amazon.
I didn't say it's expensive. I didn't say it's expensive. You're not paying 29 times for buying your shaving cream on Amazon.
Here's what I'm saying to you is I get your point. I do. I think actually that maybe the consumer business is underrepresented.
It's 37 times forward, by the way.
But it's 14 times EBITDA versus 18 times historical. And I would argue North America, maybe you don't want to pay that kind of a multiple just for that, but the profitability is improving. You're going to see margins improve in North America to be about 6.5%. That's what people want. They want them to be more profitable. And AWS, they had supply chain issues in the last couple of quarters, and they're actually going to lapse those. And that actually is a very easy comparison. So I actually think there's a chance you could see an acceleration in AWS.
A simple story. It's a story of operational leverage, which you talked about, and exposure to two secular growth areas. That's the story. And the operational leverage that comes from everything that Steph's talking about is what investors are going to pay attention to. Do you get operating leverage from your business as you continue to scale? And they are getting more efficient, no question.
The bar, maybe for everybody, is high. I don't know how high the bar is for Apple at this point coming into this particular quarter, because these particular numbers, well, because we're waiting for more action, if you want to use that word, on what their AI strategy truly is going to look like. Needham is cautious into the earnings. They must articulate a Gen AI action plan, says Needham. Jim, Jason, Rob, you own the stock. Jim?
I'll just make this quick. I talked about pretty pictures in the start of this A block, but I'll tell you what, the picture of earnings revisions for Apple is not a pretty picture. They need to turn it around. I mean, in the proverbial sense, they need to pull a rabbit out of the hat. Was that Dan Ives you were just quoting? Whoever you were quoting, that's exactly right. They need to pull something out of the hat with regards to generative AI and get these earnings revisions going higher. They're going down right now. That needs to turn around at the multiple that we see on Apple.
Are we optimistic now? What's the story here?
It's a name that we're underweight right now. We trimmed it earlier this year because of a premium valuation relative to their growth rate, a lackluster product refresh cycle, and the fact that, that we own it at all is because of the gains we have, and the management team is hard to bet against, really hard to bet against.
Okay. Let's talk about IBM. It's the AI story. We bring it up because Steph owns the name. We haven't heard from her yet this week. It's been a tough week for that stock, as you know, off their guide. And the CEO says, Arvind Krishna said the other day, I quoted this the other day, I'll quote it again, because I think it's meaningful for how CEOs think about the current environment and where they think the future is going to lead. Quote, I've turned from being, I used the word cautious optimism at the end of the first quarter. I would now turn my way all the way to optimism around the macro environment. Stephanie Ling heard that, and she's like, okay, well, I'm going to buy more of IBM because I believe him, and I believe the story.
At one point, it was down 10% yesterday, Scott. That's ridiculous. They're very, very high expectations. Headed into the print, it was up 18%. In the past year, up 42%. And Arvind did deliver on the growth, on the turnaround, because he had total revenue growth of 18%, earnings growth of 15%, operating margins up 320 basis points, gross margins up 230 basis points, free cash flow grew 9%. Consulting was fine and better than Accenture, and I've said that I think they're taking share. I absolutely think that's the case. Infrastructure helped by mainframe. I know people don't pay for that as much because it's a very cyclical business, but still up 12% in infrastructure. It was software that decelerated that people were nervous about, but I look at Red Hat and I look at the double-digit bookings that they have, and the fact that it accelerated at 12% growth, I'm not alarmed at all at the software slowing down from 6 to 3.5%. I think down 10% was a gift. I think this is going to be much higher a year from now.
Okay. You mentioned infrastructure. That's been a key part of the AI story from certainly a industrial standpoint. You could check out CNBC Pro for this, but I'll just give you the headlines here. It's the best sector, not tech. Industrial's best sector because of its trade deals, its power surge. We're up 16% on industrials because of stocks like Stephanie's GE Vernova, which is up almost 90% this year. It's the second best performer in the S&P, up 14% On Wednesday, after they beat, Johnson Controls, Quanta Services have been all-time highs this week, too. You own both GEV and Quanta Services.
I do, and Eaton and Rockwell and Vertiv, all of the same theme. So I'm very exposed to this. Electrification, we are going to have, it's going to be decades. This is a decade-long theme. $4 trillion is going to be spent between now and 2025. GE Vernova was really quite good. I mean, record backlogs, book-to-bill over 1.3 times. They're talking about power organic growth going forward for the full year, 6 to 7%, but that electrification, organic growth at this size of a company at 20%, that is enormous. And it bodes well for all of the stocks that I just mentioned and then some.
Okay. Market likes any bit of incremental positive, obviously, on this, which makes it even harder to be negative ahead of any perceived trade deals before the deadline of the first, right?
The economy has been incredibly resilient for quite some time, but especially since the April 2nd Liberation Day announcement. It's surprised a lot of people, but it was not going to continue forever. I'm talking about the economic resiliency. We needed trade policy uncertainty to decline, and we're getting that in spades. I mean, we're getting a lot of decrease in trade policy uncertainty. Companies now are figuring out where to expand, where to hire, where to build plants, and they're going to do it because profits are growing, and regardless of what the Fed does, capital is cheap. They're going to expand.
Well, look, go right back to what I read from Arvind Krishna of IBM.
Yeah.
That quote kind of says it all. From fog to dissipating fog. Now you can actually have some visibility as a corporate leader.
And I'll add to it, we've already said it, but you know, the CapEx spend from the hyperscalers, let's add one little detail to that. There's a lot of international AI build out going on. Think about what's going on in the UAE and Saudi Arabia. Europe is going to catch up with this. There's an international flavor to this as well.
You're also seeing consumer sentiment starting to improve as well, and that's important in addition to business sentiment because you're getting a little bit more of the unknowns to be known. Period.
All right, so let's go on that theme a little bit. We'll segue to some moves, but we'll take your buying more of Las Vegas Sands.
Yeah, the stock is it's actually flat year to date. And the expectations were really low for the earnings, but they were actually quite good. Singapore is on fire for them, and that's about 40% of their revenues. And it beat expectations by 44%. And Macau was less bad, and actually the margins were actually better. So that's much more of the business. That's 60% of the revenues, and so that's what we're rooting for. But interestingly enough, the CapEx was $400 million lower than expectations, and that tells me that they're getting to the end of the renovation cycle in Macau, and that's what we need because they've been losing market share, and I think that is going to be the story for the second half of this year into next.
Okay. Robert, a new buy. We'll do that first. It is Workday. Tell me more.
Yeah, not the most exciting company despite their great commercials that we all know, right? You are a rock star. We're all rock stars, right? But it's cheap. It trades at a 20% discount to its peers. It's down about 7% year to date. They're obviously an HR management business, but they've got a great AI product suite. And what we're excited about is as corporations focus on operational efficiency and driving more productivity, they're going to be critical in that environment, and their product suite has proven that to be the case. So we like it.
Okay, you added more to NRG.
We did. This is one we took a little Vistra gains last year. You remember in January on the show, bought NRG cheaply. This is a company that has half the debt of its industry peers. We're a big believer in this power production theme as it relates to AI, and this is a high-quality producer with a diversified platform and a tilt towards natural gas. And so we bought some more. It's no longer cheap at 20 times. We talked about that on the show last time. What is cheap for a utility? I think the playbook may have been thrown out there in this current world.
You sold TPL, Texas Pacific Land.
Not that it's a bad business, it's a tax loss. We have very little of those. This is something we bought, short-term tax loss. It's still a great company, but with declining rig counts and a range-bound oil price, it's not something we think there's a lot of near-term opportunity in.
You trimmed some KLA core. Why?
This is a valuation call. It's been a great performer for us. I think it's up like 45, 50% year to date. At 27 times, it's no longer cheap, and so we're just resizing the position.
All right, we'll get the headline. All right, we're back. Let's do some calls. The first one's Needham. They upgraded Gilead today to a buy. 133 is the price target. They like a positive survey that they got for one of their drugs. 70% of Gilead's revenue comes from the HIV franchise, so it was related to that. Rob Sechan owns that name, and you bought more.
Correct. It's up a good bit year to date, up like 28%. Still trades cheap. Very high quality company with a reasonable valuation. I think that change is just further success in that platform in which they're starting to dominate. And so this is a great way to get quality exposure at a reasonable price.
Okay. Let's talk about Chipotle. It's been a brutal week. We know that. Coming off the worst day in like 8 years. It was reiterated by today at Truist. That's after the earnings. The same-store sales miss is what totally upset the market. They think that it creates a strong buying opportunity. Now, Stephanie Link didn't buy more, so maybe you disagree.
I don't know. I'm kind of thinking about it, to be honest with you. It really wasn't a good quarter. There was really very little that I could say was positive. The only thing I can say is that they said June saw positive comps versus the quarter, which had negative comps, and that your two-year stack is running 7 to 8% on comps. So you have to kind of smooth it out. They have easy comps going forward. That should help, and new products. But this is going to take some time. So I have to figure out if I want to be that patient, because I think it's going to take more than just 2 quarters to see the stock reverse.
Let me ask you this.
Yeah.
And I mean this with no disrespect whatsoever to the current CEO at all. How much of the prior performance was due to Brian Niccol? How much of what we're witnessing now has nothing to do with anything other than he left at a good time to leave, and maybe the fundamentals were rolling a little bit on some of what this company had going on?
It's entirely possible, but he hasn't, really done much with Starbucks. This is Brian Niccol. I mean, not yet.
Well, that's a lift in its own right.
That's a big lift.
But
yeah, I hear what you're saying.
Chipotle was a lift when he got there.
Yeah, I mean, if you look at the chart, and I don't really look at charts all that often, but if you look at the chart, it was rolling over just before Brian Niccol actually left. So, yeah, trends were softening. But I do think that this company is best in class in terms of products, and that's what they do well. And Boatwright is very, very good at kind of the systems and digital and the operational part of things, because he was the COO. So I think it's a transition. There's no question. I think there's a soft macro. Consumer was really mixed in April and May.
Competition? There's more competition, isn't there? Like things like, I don't know, Shaq and Kava and whatever else.
There is more competition, but I think they can handle it, and I can think that they hold their own with regards to products. I really do think a big part of it was the macro. Think about what was going on in April and May of this year on the consumer front. We had terrible consumer sentiment numbers and confidence numbers. Everyone was freaked out over tariffs. So, they've got, as I say, easy comparison second half of the year, and then you have this whole new product story. So, it's down a lot. It's down a lot. I don't want to sell it down here.
Okay.
But I'm not sure I'm going to be buying more.
All right, Jason Stipe, quickly on Procter, which got downgraded to neutral from JPM. I thought the commentary on this note was specifically really negative. Yeah. We expect another lackluster quarter and normalization of category growth. Lower income consumers in developed markets are more cautious, and PG is more dependent on DM than EM. What do you think about that?
Yeah, it's an interesting call. I mean, guess what? I mean, 1% revenue growth and 2% earnings growth is not exactly lighting anybody's hair on fire. It is a multinational. The dollar is weakening, so I think that could be a plus. 2.7% yield, I think, is positive as well. 7 out of 10 of their categories are improving organically. So I still continue to hold this one. We'll see how the quarter comes in and the quarter's pros.
Okay. Try and head into the weekend on a high note. The markets certainly are acting that way now as the S&P and NASDAQ extend their gains. Some positive trade headlines leading us that way. Closing bell today, Tom Lee, Cameron Dawson, Mohamed El-Arian. So we're going to have a good finish to this week. Rob Sechan, your final trade's what?
Gilead, we talked about it earlier.
Okay, Jason Stipe.
Blackstone, really strong quarter.
Farmer Jim.
Disney ready to break out a consolidation.
All right, and Stephanie Link.
Buy the 5% dip in Visa.
All right, everybody. Good weekend. I'll see you on the bell.
Hey, I'm George with Blue Cloud Trading. We just saw some clips from the halftime report this last Friday, and it's Sunday today. And so I thought, hey, let's do some analysis of the stocks that they talked about. So we're going to look at 11 stocks that they discussed on the show. And I've got the strongest ones flagged right here with a little blue flag that you see right there. And you'll see some of these other ones like IBM and Disney and Procter & Gamble. We'll also take a look at 3 of the Mag 7 stocks, Tesla, Apple, Meta, as well as some of our members' requests, like the gold mining and silver mining. So let's get into all this, guys. And by the way, I'll be coming out with a second video a little later today. Tom Lee's going to be on that one, and I'll go over the market, the index ETFs like the SPY, the QQQ, etc., and the sectors. So you might want to look out for that. Anyway, let's get into this. So PWR, which happens, by the way, they did bring this up on the show. Many times I don't really discuss the stocks that are in the portfolio, but I figured, okay, well, this one's a nice one here. It's a stock that I added back on July 3rd, and this one has taken off. You can see we're looking at a 4-hour, but let's look at this on a daily chart. Here's a daily chart, and let's make that a little larger. Now, just a reminder that the stocks that I do pick, they must meet two requirements. They must look really strong on both the weekly and the daily time frame. We're using the Ichimoku indicator. Price is above the moving averages, as you can see, and above the Ichimoku cloud and the 200-day moving average on the daily chart. What about the weekly? Same thing. So when you've got strength in both time frames, expect a continuation generally, unless of course, some really bad news comes out. Earnings announcements can change the whole dynamic, but right now PWR is looking pretty good. Their next earnings are on July 31st, so keep an eye on that date. Really important. LVS, Las Vegas Sands. Here we are on the daily chart. I do like this one too. It's in the resorts and casinos, and you can see that it broke through this little prior level of resistance right there. Okay, holding up above it. It's above the moving averages on the daily as well as on the weekly chart. 3 weeks now, holding above the Ichimoku cloud, and the cloud just became bullish. If you look below, you'll see the single span A just crossed above that purple line, the single span B. So that's very bullish, guys. We also have here the ADX, for example. Notice how that is moving up. That represents the momentum, and the green line is above the red line. So that's also very bullish. We've got also high volume here this last week. So I think this is going to do pretty well going into next week. I like it. BX, Blackstone on the daily chart. Looks a little bit toppy up here with these two reversal candles. We've got a doji, and then we've got this like small little, almost like shooting star type candle. All right. But the momentum is still strong. So you'll notice that the ADX is still moving up. The green line, the positive DI9 did move down slightly here, which represents the slowing down that's happening right there. But overall, I like this trade so far. It's looking pretty good. And here it is on the weekly chart. This is the first week where it actually broke through the Ichimoku cloud. The Chiku span, which is the closing price here of the week, it's presented basically in 26 periods into the past. That has not crossed above the candle 26 weeks ago, because we are looking at a weekly right here. So that's the only thing that I don't like. How about the cloud itself? Well, that too, we've got the single span A still under single span B. So what that tells us really is it's still not a very strong trend on the weekly chart, but it is meeting the requirements of getting above the cloud. We've got a faster moving average above the slower one there. And it looks like everything is moving in the correct direction. So that single span A is in fact moving up. It should cross above, hopefully next week, and we'll see if that happens with the Chiku span as well. All right, let's look at KLAC, which is KLA Corporation, and that's the ticker symbol right there. You can see here this last week, it broke through that 896.32 level from that prior high. I'm sorry, from this high right here, sorry. That candle right there is at 896.32. So it broke through that level. It's holding up above it. That's the key thing. As long as it remains above that, expect this to potentially continue moving up. Okay, that's a weekly chart, and here it is on the daily. It just is stalling right now. It's in between the two moving averages. I call this the equilibrium zone right here, in between the two, the Tenkan and the Kijun. So once it breaks back above that level, I expect a continuation. If it doesn't, and it breaks under the Kijun, expect it to come back down to the cloud and find support there, most likely. Okay. What about CMG? Another stock they talked about, Chipotle. Big drop this last week, right? It had a big drop, and now it's starting to recover a little bit. If we look closely, here's some support levels, like right there from that prior low, and it looks like it's stalled right there. And so maybe we'll get a bounce here, but this is not a stock that I'd be looking at all. Unlike the other moving, like the other stocks that I just mentioned that have a blue flag here, CMG does not, and the reason it doesn't is because the negative DI is above the positive DI. ADX is moving up. Price is under the cloud on the daily chart. It's telling us that this is a weak stock. You don't want to be buying a weak stock because it can stay in this downtrend for quite a while. It's in fact in a downward channel, as you can see. So we've got a series of lower highs here and lower lows. W Day or Workday Inc. Okay, is another stock they talked about. This one's also under the cloud on the weekly. I would skip this one. Same thing with the daily. It doesn't look terrible. It doesn't look good there. TPL is Texas Pacific Land Trust and oil and gas. Okay, no on that. It's under the cloud. It's in a downward trend. You don't know when this thing is going to start turning around, so I'd hold off on this one too. IBM had a big pullback here, but finding some support at that 255.79 level. We've got a couple of reversal candles here. Could it potentially turn around? Yes, it could, but again, you're taking a chance here. All the elements of Ichimoku are telling you to stay out of this stock, and here it is on the weekly chart as well. On the weekly, it doesn't look terrible because it is holding up above the Kijinsen. If you look right there, it's holding up above so it's finding support here. There is a chance for potential move back up again with IBM. I just wouldn't be adding a position here, okay? Procter & Gamble is still under the Ichimoku cloud in a series of lower highs and lower lows. No on that one. Disney, strong, okay? If we look at the chart here, we've got a series of higher highs and higher lows. That's very important. It's also holding above the 2 moving averages right there. The cloud itself is still very bullish. How about the weekly chart? As you can see that we broke through the Ichimoku cloud. This happened back in August. I take that back. It happened in May, on May 9th of 2025. And since that point, it's actually moved up 13.8%. So I like Disney. Disney is looking pretty good. It's got some potential here. I somehow missed the fact that it was looking bullish on both of these time frames. Therefore, let's go ahead and give it that little blue flag there, okay? And then NRG on the weekly chart, it's basically kind of looks like it's stalling right at the 9 period, the green line. Okay, so I wouldn't be adding here on NRG. On the daily chart, Tenkan-sen is under the Kijinsen. That means that the faster moving average, the 9, is under the 26, so I'd hold off on that too. But it's kind of just consolidating. There's not really much negativity here. It's still above the Ichimoku cloud. It's just consolidating in a box right now, so I'd hold off on that one. All right, let's take a look at the Mag 7, 3 stocks within the Mag 7. Tesla is currently above the Ichimoku cloud, but under the 200, so no on that one. On the daily, it's also under Kijinsen, and on the weekly chart, it's inside the cloud still. Apple on the weekly is inside the cloud, so no on that one. Here it is on the daily chart. More bullish, but I would not be adding Apple here. The next earnings are coming out this week, July 31st. Meta. Also, like on the weekly chart, it is very strong still. There's nothing negative here to say about Meta on the weekly. However, on the daily chart, seeing some weakness here. You can see that it created a lower low from the prior low. We've seen a crossover here, the Tenkan-sen crossing under the Kijinsen. So not a stock that I would be adding a position at this particular time. However, if it does break through that trend line that you see right there, it takes out maybe this prior high, okay, then I can see this stock recover and continue its move back up. Maybe we'll have to come down to the cloud first to get that bounce, okay, which typically happens. Now, let's go to the next stocks here, which are Mag Silver Corp. This was one of our members' requests. On the daily chart, it is basically just consolidating. It's stuck inside this little box that you see here since it looks this. Let's see, that was since June 5th of 2025. Hasn't really moved much. All right. So it was down 0.74. It just crossed under the Tenkan-sen. Let me look at the weekly chart here. The weekly is still very strong. So, if you happen to have a position in this stock, it's certainly something that you could certainly hold at this point because it is holding up. So yeah, overall, I like MAG, even though their operating cash flow is negative $6 million. When you look at the whole context of everything, the capitalization of this is $2.2 billion. So that's a very, very small number. It's not even, it's not important. GILD, Gilead Sciences, Inc. Let's look at the weekly first. So very strong. Okay, bullish cloud. We've got Chico span above price. Price is above the moving averages on the weekly. Another positive thing that I'm noticing is the right here, the positive DI9 is crossing above the negative DI9. So that's very bullish too. We have a bullish engulfing pattern right here too. A lot of good things happening on the weekly. Here's the daily. It also on the daily, as you can see, broke through this little prior high. Okay, so expect that Gilead will continue moving up. We've got ADX moving up, positive DI above negative DI. It looks good to me. I like it. DGRO. Let's start off with the weekly chart on this one. So this is the iShares Core Dividend Growth ETF, and it has recently, looks to me, yes, it did. It broke through that high right there of 65.08. And that is a weekly level. So it's hitting all-time highs. Never reached this area before. So the iShares Core Dividend Growth ETF, I like it on the weekly and on the daily. Looks very bullish as well. It's just kind of moving sideways these last 3 days, but holding up above that level. So I do like this. How about SILJ, which is the ETF for the Prime Junior Silver Miners? Okay. Now, this one here, let's start off again with a weekly chart. We've got a bullish cloud. We've got price above the moving averages. Chico span is above price. Everything looks pretty good here. Directional movement index looks good. A lot of more volume. Check out the volume down below. Notice how that's also increasing. That's telling me there's more participation taking place here. Compare that to the past over here. All right. Do you see how that the volume starting to come in a bit more? And so that should lead to, as you can see right there, it broke also above that level. It's holding up above that prior high. It should lead to continuation. Here's the daily chart. All right, so right now it's pulled back, but it's holding up above the Tenkan-sen. So I do like this one still, even though it was down 1.02% on Friday. GDXJ, which is the Junior Gold Miners ETF. Here's the weekly chart on that one first. Let's start off with that. Holding up above the Tenkan-sen, the 9-period moving average. I like it. This is a strong trend that we're in here. On the daily chart, it has pulled back a little bit, but it's finding support at the cloud. Like I've said before, many times, price will come down and stall right at the cloud. Why? Because it's based on a mathematical formula, and a lot of financial institutions use Ichimoku. A lot of professional traders use Ichimoku. Ichimoku stands for at a glance in Japanese. You can quickly assess the strength of the trend. Now, it basically is consolidating, and you can see that price here has been stuck in this little box. The Chico span is still underpriced, so it's not really, I would not be adding a new position here because of that. Okay, we're waiting. I'm a breakout trader personally. I'm looking out for price to break through a prior high. All right, or maybe if it was like, not consolidating for so long, I would consider it. But right now it's not something I would add a new position to, but it's certainly a hold position. And that's going to do it for this video. So stay tuned, guys. I'm going to do one more video today. Tom Lee is going to be on that one, so you want to check that out. I'll go over the index ETFs. I'll show you what I'm going to look at. We're going to look at the SPY, the QQQ, the Dow, the Russell, Bitcoin ETF. We'll also take a look at a lot of the sector ETFs, which we haven't covered for a while. So we're going to look at those as well. So look out for that and have a good rest of the Sunday. If you don't have the time to see that second video. If you guys want to have access to this candle cheat sheet, as well as the patterns cheat sheet, this one here that has multiple patterns in here, you can get it for free on my X page right here, Blue Cloud Trading. You'll find me under the handle on Twitter of @BlueCloudTrader. All right. And then what you need to do is, once you're on the page here, go to the highlights tab here, and then just scroll down a little bit, and that's where you'll find it right here and there. Okay, so that's how you can find it. And if you guys like the the videos that I'm producing here on the channel and you want to support the channel, one of the things that you can also do is when you're on the home page here, you can click on the subscribe button. All right, and then once you've subscribed, a new little thing will pop up. It will say the plus button. So then you can also subscribe to join as a member as well, if you choose to. And you can become a Blue Cloud supporter, and you can request a stock to be, or ETF to be analyzed on the show. Blue Cloud Trader, this is where you get access to the exclusive member-only videos that I produce. And I go over my entire portfolio. I go over the strongest stocks. And I actually provide 20 stock ideas for the upcoming week, every weekend. And that's really important because we're looking at the best stocks that have excellent technicals on the weekly and daily time frames. And then if you want daily updates on my trades, Blue Cloud Trade, I do a post every day. And let's see, daily trade updates. There it is. Okay. There's also some day trading videos. You become a Blue Cloud Legend level member. So there's 3 tiers. You can choose which one you're interested in. And basically, once you've become a member, there'll be a new tab that pops up right next to the posts. It will look like this, membership. You click on that, and you can access those posts. If you scroll down further, that's where you can find the member-only videos on my homepage. Real easy. Okay, let's get back.